And welcome. This is Mary Ellen McGonagle, and you're watching the MEM Edge show. This is the show where we put you in front of where the action is in the broader markets. And this is about the third time that I have changed the date so that the show is on Friday, and I love it because it allows me an opportunity to share with you some insights as to what has occurred during this recent week, and more importantly, with an eye toward helping you develop a plan going into next week. You want to capitalize on what has occurred. So we have a lot to cover. Let's jump right in. Today, of course, the first thing that we are going to be doing is taking a deep dive, looking at the current markets. Where are we? Are they healthy or not? And then from there, of course, we will go ahead and drill down into some of those sub-sectors so that you can uncover potential pockets of strength or weakness as well. And then also turnaround candidates for the next week. And really, this could also be termed pullback candidates. We saw a lot last week, certainly in the way of volatility, a super sharp sell-off on Tuesday. So a lot of names really pulled back, and some of them rather sharply. And these are the types of names that you could potentially benefit from that pullback, provided they have leadership qualities. So we're going to go ahead and look at some of those candidates. We're also going to look at relative outperformers versus the market. And we did do this last week as well. There's a reason for that, and it has everything to do with historical precedent. When you are in a shaky, volatile market, certainly over the last couple of months, we've been very range bound. You want to have at least a watch list of those stocks that are outperforming the broader markets. They don't have to be spiraling up to new highs, but at least they are holding their own. History tells us that these stocks that can withstand any downward pressure in the broader markets, once those market pressures are lifted, these stocks right out of the gate are going to be your outperformers. So we're going to share some stocks that have those characteristics. And then earnings season, it's going to be starting next week with a bang. Lots of companies reporting. Of course, the major bellwether banks are going to be very closely watched. As we go into earnings season, I will tell you, this is another historical precedent. But as those bank stock earnings go, oftentimes so too does the remaining part of earnings season. They do tend to set the pace. They can oftentimes be overcome if that pace is too high or too low, but most definitely we will want to keep an eye. And I'm going to share some of the bigger names that are due to report next week, just so we can have an eye on what to be on the lookout for next week. So let's go ahead with that and dig right in, take a look at the broader markets. And as usual, we're looking at a daily price chart of the S&P 500 so that each bar is representing 1 day of trading activity. And I've gone ahead and overlaid these simple moving averages. And these are really super helpful. And I can share with you precisely why. The green is your 10-day simple moving average. The red is your 50-day, and then the blue is a 200-day simple moving average. So quite simply, they're smoothed out lines of the prior, in this case, 10 days of trading, 50 and 200. So in essence, we want to pay attention to the position of, and this can work for individual stocks as well, but we're looking, of course, at the S&P 500. Going back to this June into August period, a nice uptrending rally. Take a look at how this index found support at that upward trending 10-day simple moving average. Now, more recently, we can see it's been a very, very dicey market. Last week's action into this week. So two things have occurred. One is this shorter term 10-day simple moving average is now trending downward, not what you want to see in an ideal upward trending market. We can see oftentimes that downward trending 10-day can act as resistance. However, there is some good news here, and one is that this 10-day simple moving average just met with that 50-day, the red. If we go back historically and we see this shorter term 10-day cross down below the 50, that's known as a golden I'm sorry, a death cross, and it's telling you that the momentum has shifted. So this is taking us to that May correction. We also had that tough August period. And then, of course, we can go back historically to last fall that led into the bear market. It can often be your very first signal that more downside is ahead. At this juncture, we were able to touch upon that 50. But should we be able to retain today's constructive action and add to that, we should be in good standing as far as that potential negative action. We also have the indexes above these 10 and 50-day simple moving averages. The move does appear to have occurred on fairly decent volume. So that's good. We like what we see. I do. And we can also marry that with, up here I have that RSI, relative strength indicator, trending upward and also up above this dash net neutral. So we are in good standing here. Stochastics, this is another very helpful momentum indicator when you are looking to identify potential turns. And again, this can be used for stocks. I tend to use it more for the broader markets. Again, upward trending and then above this dash net neutral in positive territory. So I will say one day's action does not a market make. However, what we did see occur today is really quite constructive. Naturally, you're going to want to go back historically and see a continuation of today's action. But let's go ahead because we're going to look now at some of the other indices, indexes, and really drill down to get a feel for really just what did occur this week. So, first area that I am going to share with you is this candle glance view. Now, this view comes to you from StockCharts.com. Of course, that first page interface, it is normally pre-populated, but you, of course, can add your own indexes, broader market ETFs. So what we have here is the NASDAQ, S&P, the Dow, the Russell, uh, the US Treasury yields, the dollar, gold, oil, and volatility. So you can see just how quickly you can wrap your arms around strength or potential weakness and relative outperformance among each of these subgroupings in the markets. What I've done too, I go ahead and I add what's called an RSI, that relative strength indicator, sort this list by descending. So I want the strength over here going to weakness. So let's go ahead and update that, make sure we have the latest, greatest, and take a look at what we have. Hopefully you can see, we can see this is the 10-year yield. It's not the treasury, it's the actual yield. And we can see a very significant, nice uptick here. Treasury yields had been very low. Let's go ahead and blow this up a little so you can see the action and just how important what occurred this week could possibly be. This puts us at the 10-year yield at about 1.75, but we can see it had been languishing down in this 1.5 area for some time. This is during that August tough period in the markets. Generally speaking, lower interest rates are not good for bank stocks. They also have everything to do with the outlook with the Federal Reserve. Oftentimes we'll see these rates, the actual yield drop, but we are seeing a nice uptick, and you're going to see the areas that are impacted as we go down and take a look at some of the individual sectors. So yields rising. The next area I have here is IGV, and this is an ETF for software stocks. I'm going to blow this up as well because I really want to share with you just how powerfully strong software stocks were. This is a daily chart. This is the beginning of 2019, and IGV is a pretty good proxy. It's tech software ETF. So this big strength, explosive upside falls in line with the markets in August, and take a look really on the map. These really super strong software stocks, and it's an area with my work with MEM investment research. I do have my MEM Edge report that comes out bi-weekly, and as part of reviewing the markets, I also select individual stocks, and a lot of software stocks were on my list as a suggested holdings for a good part of the first half of the year and then some. But more recently, each of those names, except for one, was removed. So I'm looking for a turnaround. I want software stocks to come back into play. They're nice, healthy growth areas. And this week, we did see a very encouraging sign with the break back up above this simple moving average. We're not getting these other outlier. And I will tell you, I've consistently screening. If we have time, we're going to cover some names that are perking up, but overall, the group is still not ready for prime time. So from there, we can see the Dow, and that makes sense. The Dow Jones, a lot of these economically sensitive stocks that got super hit on recession fears did bounce. We also have the NASDAQ. Good to see that in a healthy mode because this is going to be your high growth areas and so on. I do want to drill down here to take a look at volatility because that did drop below the 16 level. We're at 15 and a half. For most technicians, 17, 18 and above is a red flag. So good to see volatility slipping. And indeed, we will want to see that continue. Gold as a proxy for relative safety also dropped, had a fairly, half a percentage point drop today. Now, I do want to, from here, go ahead and take a look at the S&P sectors so we can get a good feel for what has occurred there. And well, let's see if I can get us over. Sure, here we are. So the 11 S&P 500 sectors, I've gone ahead and did the same practice where I put the RSI as an overlay and then sorted it in descending. And again, this will take a matter of minutes and you can quickly assess where the strength is relative to the weakness. So take a look. Technology up here in the forefront, potentially hitting a new high. Let's broaden out that view. And indeed, we're not quite there yet, but we sure did get to a new high before pulling back into the close. The markets lost a bit of their fizzle at the end on the news that trade war talks may not have been as successful as initially thought. But let's take a look at XLK, this technology sector. We can see RSI is positive. And then down here, we have the moving average convergence divergence. We're just now poised to have that black line go up through the red. So that is quite constructive. We're going to drill down there and see where the interesting areas are within technology. From here, we do have these, the XLU defensive utility stocks. And I will tell you with my MEM Edge report, just to share with you, I've been adding these utilities over the last 2 months. There's a dynamic that is occurring among utility stocks that is putting a growth component to a very select few names. And it has everything to do with alternative energy. So I urge you, you can trial that report for a very nominal fee for 4 weeks. You can go to meminvestmentresearch.com and take a look because utility stocks within defensive areas, it also has a growth component for some stocks. Consumer discretionaries, these stocks had a nice, particularly good day today. We will get into that area because there is a select area of consumer discretionary. This is another area that I specialize in, but there are select areas that are really outpacing. And then industrials, and materials and financials. Those three groups are those consumer cyclic, they are those economically sensitive areas that are pushing back up to the forefront with the rally over the last couple of days. And then we can see healthcare still struggling, but I will tell you a number of really powerful names within healthcare that are outpacing not only the healthcare index, but also the broader markets, and energy still suffering. So there's your view as far as taking it beyond that big picture, broader markets. Now we can see where the strength is. I'm going to take a minute. We're going to take a break here, but when we get back, we are going to get into how you can uncover individual stocks. So stay tuned. We'll be right back. And welcome back. What we are viewing here is that first page on StockCharts.com. And for those of you that may not have don't visit it regularly, I will tell you they have made some tremendous changes to this first page as far as some of the views that you can get. You can change this so that you can look at the S&P or the NASDAQ. You're getting a wonderful view. You can shift these to meet your needs. I have the sector summary down here and the market movers that I find quite useful, but here you have a drop-down menu, all kinds of information right at your fingertips on this first page. For now, what I'm going to do is take us to an area that I know I tend to do because I find it really helpful as far as drilling down and taking a look at where the strength is within a given sector. So let's go ahead up to the member tools area, and I'm going to take us to the sector summary. And as you know from what we have viewed so far, you can see where the strength is. This is a 1 week view of the performance. And I do want to drill down into technology and consumer discretionary. And from there, we're going to move on to other items that I would like to get to. But within technology, here's your strength for the week. And we talked about software coming back to life, semiconductors. This is another area, super, super select. Not every semiconductor stock is doing well. Again, certain dynamics are going to push certain names higher than others. But let's go ahead into the hardware area and take a look. I'm going to sort this by the StockCharts technical rating, SCTR. And we can see Roku. Now, this is a name that I shared with you last week. We took some time, we looked at the chart, and it was not at that time ready for what I called prime time. But let's look at what may have shifted. There was an analyst that came out and upgraded the stock last week. So Monday, Tuesday, Wednesday, Thursday, Friday, and we can see this is where we were. In fact, what we did discuss last week is the fact that the stock at 109 could easily rally to 128. Hopefully you remember that because that's a nice significant rally that we were on the prowl for. So it does appear to be doing that. And from here, we are going to want to watch how the stock behaves at this 50-day simple moving average. This is your divide. So should we see Roku break above that 50-day, because we are starting to see an RSI that is just above that net neutral into positive territory, that would be very, very constructive. We're seeing nice volume on this uptick, and that's telling you institutions are in there. They view the stock potentially as being cheap. They want to buy. So a break above the 50 combined with a positive RSI, we did get this nice MACD crossover, black line up through the red. And I talked about this last week as well, in the sense that this early crossover could very well be, it's what I look for in downtrend reversals. And then when it does break above this net neutral zero, we are in even better standing. So that's one way that you can. And as we go back to, we are again looking at computer hardware, quite simply sort it by this percent change for the week. We can go ahead and sort it by this SCTR. And you can just hover over it and get an overview. Apple's hitting a new high, as is SNX. So it really is going to depend on your style. Are you on the prowl for a potential turnaround, or are you more inclined toward those stocks hitting a new high? Let's take a look at another potential turnaround. This is MRCY. The stock really got hit here with the broader markets, and we can see very similar to Roku last week. It's just breaking up above that 10-day simple moving average. However, we're not getting these outlying other indicators that are telling us that the stock is in a constructive phase. But if we get a decisive break above that 10, this is another name where you could see a nice rally from this 75.5 up to 82 before it could meet potential resistance again. So potentially put that name on your radar. So that's how we can uncover names. Let's go back to consumer discretionary, because I have a lot of other areas that I would love to get to with you today. So consumer discretionary, as you may recall, we were noticing that this area had a significant move, certainly today, and it is one of those growthier areas of the market that I tend to traffic in. I'm drawn to these areas because I'm on the prowl for these big outperformers. I'm identifying these big winners. So again, over the week, we can see that retailers, auto parts, and so forth. These are the areas this week. Interestingly, home construction lagged a bit, and that could be because interest rates did. We did see a pickup in interest rates, and this area, in addition to seeing growth, a lower interest rate environment will help those types of stocks. So apparel retailers, why not? Let's go ahead and take a look at this area by sorting it. Again, performance, and we can see I'm a lot of these bigger names, these names with bigger moves, we can see that they are either very small in market cap or they have a very low, what's called a stock charts technical rating, because quite simply, we can click on just to share with you, these are your down and out names that are having, I would call dead cat bounces. And also these smaller names are going to, by nature, move faster. SSI is a $2 stock. So you are going to see these big moves. They are not going to be as compelling to me. I'm going to sort it by this rating, and I want to be more in line with some of these bigger names. So we can look at Burlington as an example. This is a stock that I own. It had this nice big gap up here on earnings, and take a look. It held in remarkably well despite a tough market. This is what I talked about. Those names that withstand downward pressures very often go on to be your leadership type names once the market pressures lift. So we have the stock back up above the 10-day, the RSI positive, MACD poised to have that signal cross over. So hopefully through this exercise, you are able to determine and see an easy way for you to get in front of candidates within these stronger areas. So from here, what I wanted to do, there's so much I can share with you, but I did want to just review some of these names that are due to report next week. And when I do this exercise, it's with an eye toward pointing out names that historically have impact on the broader markets depending on the release of their report. So one of the first names we can take a look at, this is a bellwether name in the communications sector. It is Netflix. I'm going to go ahead and make this chart a little bit larger. And they're due to report on Wednesday. So take a look at Netflix. This is back here in July. This is the release of their earnings report back here in July. So we can see a huge drop in the stock. This particular company, it's not going to be about earnings. It's going to be all about subscribership. That's the big metric that analysts and Wall Street are going to be on the prowl for. This drop went on to be rather significant. So we can see at this juncture, Netflix is relatively cheap on a relative basis, certainly from this peak in price here. So we are going to want to keep an eye on it when they report their numbers on Wednesday. We are seeing an RSI trending upward. We had that crossover here on the MACD. Now, I do mention this every time that I do not trade going into earnings. It's just too volatile. But I will argue that Netflix is worthy of keeping an eye on because, again, it is cheap. If it does gap up on earnings, potentially you could see a continued move upward because the stock really did get beaten down. So, and then also you will see that dynamic where other stocks that are in the group will also potentially move in tandem because the metrics, subscribership, and that kind of thing will spread throughout the group. Let's take a look at another name that is going to be reporting. And this, of course, is a bellwether bank stock, and they are due to report on Tuesday. This is going to be one of the first names that is going to be all eyes on. This is JP Morgan Chase, and they are certainly one of the bigger banking names. They also, in addition to being sensitive to interest rates, this is that period of lower interest rates here. JP Morgan Chase has a big credit area that is a big contributor to their revenues. So we are going to want to keep an eye on how the company not only whether their report comes in positively. This is a gap up on an earlier report, and it was able to rally from there. But these guys are due to report on Tuesday. And then on Tuesday and then Thursday, a number of these transportation stocks. And I'm thinking I maybe didn't cover that, but we do need to take a look at transportations because for a lot of people, the way transports trade, so too does the markets. This big drop off here is due to recession fears, fears that the economy is slowing. In other words, there are not enough purchased goods that need to be transported. So we want the transports to be in an uptrend to help sustain the broader markets. So next week, we have a number of rail stocks that are reporting UNP, KSU, and a lot of these names you can see they got beaten down again with those fears of global slowdown. But KSU held up really remarkably well. This is Kansas City Southern Rail, and they are due to report on Thursday, looking very constructive going into earnings. And I'll tell you, analysts are raising estimates for this stock. So as we are getting to the close today, I wanted to share with you one other way that you can screen the broader markets for potential strength. So what I'm going to do from here is take us to this predefined technical scan, and you can get this from that front page. These are scans that are already preset for you. And up here in the upper, we have bullish scans, down here, bearish scans. And so stocks that are hitting new 52-week highs, that's going to be really interesting because the broader markets are not hitting a new high, yet these stocks are. So again, this is going to be that concept of relative outperformance. So what I'm going to do is click onto that list. So there are 196, almost 200. It's not just stocks, it's also going to be ETFs. So this can be a really interesting exercise because you can quite simply take a look at some of these ETFs that are hitting new highs, and you will see that we have a lot of dividend index funds. This is a European dividend fund, equity income. So that need for income, because this low interest rate environment is still there. So sometimes this global tech, this is a very IXN is the ticker symbol. They have a lot of top holdings in that area. So that's one way that you can sort the new highs list, but you can also do so by industry grouping. See if I can resort that a different way here so that you can get a sense of here are areas in the broader markets that are hitting a new high. So we have a couple of these software, these semiconductor names, and these new highs again are stocks that are bucking the trend. These are super strong stocks and really just you're 2 clicks away from this information. I tend to like to sort it by market cap, and I want to see in among those larger names, where is the strength? And let's take a look. We have Dollar General in the consumer discretionary area, and then we have a couple of financials, but Home Depot up here in the forefront and so on. So a really wonderful area to go fishing, if I might say, and something that you can do quite easily. And I do believe I will have to certainly leave it close to that, but we can take a look at perhaps one quick other predefined screen. This is your names that are on today are up on big volume. So I urge you to take a look at this. You can do those same sorts and you'll come up with other potential candidates. I will leave it at that. Have a wonderful weekend, everyone. Take care, and I'll look for you next week.